Hello and welcome to another update video about Natgas. A new trading week has started and the Natgas price is still below resistance, and we've seen 3 waves down. Maybe we'll form 5, so we're going to take a look at that when we zoom in a minute. Overall here on the 4-hour chart, you see an unchanged structure. We're still dealing with the potential of basically another low here. We have a situation in which, after a larger degree 4th wave top in October last year, the market moved down in, well, what you know is, you know it from previous videos, a wave 1 off wave 5. We had a wave 2, a corrective rally into the highs of January 2024. The 3rd wave to the downside is likely unfolding still. Could get into the region, and they are levels that we calculated in previous updates. Could get into the region between $1.29 and $1.45. From here, a 4th wave corrective rally could unfold, which could take the price to the upper boundary line of the trend channel, and then a wave 5 to the downside to one more low. Basically, in this preferred scenario, the price would form 2 more lows. This is the preferred scenario. It takes, however, a little bit more to confirm that. What we'd like to see is continuation to the downside and a break below $1.58 next, which is this swing low that formed in February this year, and then a break below the $1.52 level, which is the swing low from the 18th of February. This would be further confirmation for the unfolding of wave 5 of C of 3. Let me explain to you, let me just delete that. Let me explain to you the microstructure here in this 3rd wave to the downside. So first of all, it counts best as, this entire move down counts best as an ending diagonal. You see that it's quite, that's a structure that looks like it consists of corrective subwaves, because there are not clearly impulsive structures visible here. For example, this 3rd wave to the downside here, at the moment it's only a 3-wave move, even with one more low, counting that as an A wave, a B wave rally. The C wave could be 5 waves, but overall still a 3-wave move. Then we could get that larger wave 4 rally there, and then another wave 5 down, which would also be an ABC pattern. Now, microstructures, they offer a lot of room for interpretation, right? So what we need to use are the Fibonacci levels as additional evidence, or as additional guidance, basically, which is what we do. So the preferred scenario suggests 2 more lows. In the alternative, the wave 3 already bottomed here, and we're already in the larger degree 4th wave, and that's basically the alternative. In this scenario, obviously, the market should avoid a break below those February lows, and the wave 4 rally would be a little bit stronger. Let's go to the 1-hour chart, because this is where the decision is going to be made. So in the last video, I suggested to you that, okay, this move up here could have topped in wave 4, obviously in the resistance area. This is the standard resistance area for circle wave 4, from where circle wave 5 should start to the downside. We might argue that this is a small 5-wave move down. This could be either wave A of a larger B wave. In the alternative, basically A, B, C, that we're already in the larger degree 4th wave. So that's something to be aware of. But in this scenario, essentially in this scenario, we would need to take out eventually the $2.1 level, $2.2 level, which is the March high. As long as we stay below the March high, I would prefer that we're now in circle wave 5. Okay, so that's a very clear condition. Please be aware, if there is a break above the March high, then we're likely rallying to the upper boundary line of the trend channel, at least. But that would not be bullish. That would simply be, from what I can see right now, an extension of the 4th wave, or that we're already in the larger degree 4th wave. But as long as we are below the resistance area and especially below the March low, below the March high, a more direct pathway to the downside is preferred. But I have to say, you know, it's not a strong leaning. I mean, what I can tell you that both scenarios are pretty similar. In both, I would expect another low, at least one more low. It would need to give me some kind of a bullish setup, like a clear 5-wave move up and a 3-wave pullback to suggest that something more bullish is going on. Should I see that, I will let you know. This looks a bit like a bearish flag here, which would suggest further downside. Yeah, but as long as we are moving in this corrective price channel, I don't see any signal for a breakout to the upside. Whether, you know, primary or alternative scenario, they are both likely and have to be considered. So for me, only really a sustained break above the upper boundary line of that trend channel would change things and offer, yeah, and require basically a more bullish interpretation of this. Overall, I am quite bullish on Natgas, as you might remember from previous videos, but first this entire move down needs to finish. And I think we're close to an overall low, but it hasn't formed yet. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then please check out the Stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.